All right, so the federal government right now just made some pretty significant changes that are about to take effect on December 15th, 2024. So what are these changes? What are some of the things that we should really take into consideration? So we'll start by making the announcement, what does it mean? So as of now, effective December 15th, the federal government is indicating that insured mortgages, those are mortgages, default insured mortgages, that generally were at purchase price of sub $1 million has changed. They've increased that threshold to go from just under $1 million to now $1.5 million, which is a substantial bump up in the threshold, right? Going from an insured mortgage of only under $1 million, which obviously took a lot of people in some of these hotter markets like Ontario and BC out of the market because these starter homes were generally well over $1 million, has now put them back into contention to look at these homes. In addition to all that, not only did they make the change to the threshold, but they've also allowed all first-time home buyers to now qualify for a mortgage on a 30-year amortization. So previously, if you were buying a home with the default insurance program, right, less than 20%, you can only qualify for a home that was under $1 million and a maximum amortization of 25 years. Now you can go up to 1.5 and qualify with a 30-year amortization. Now I have some mixed thoughts on this right now. I think for a lot of first-time home buyers that wanted to gain entryway into the housing market, especially in these hotter markets, this might be a really good program. It's obviously going to bring a lot more people to the market for homes that are priced over $1 million. And ultimately, will it drive up home prices for a lot of these starter homes, these desirable homes that many Canadian families are looking to as the market continues to change? Because previously, if you think about homes that were priced under $1 million, they had a lot more attention because more buyers could qualify for this home. Not only people with 20% down, but also those with less than 20% down. Now, if we think about that threshold of 1.5 million and qualified buyers, they're out there that are going to be looking at these particular homes. Well, that could drive a lot more attention to these homes because now they might be eligible to purchase these homes under the insured guidelines and potentially qualify. Now, obviously, to qualify for a mortgage of this stature takes a lot of income, a lot of combined income. I mean, simply looking at some of these equations, I mean, at the current moment, if you're looking at a $500,000 mortgage with, a insured product, less than 20% down, qualifying on a 25-year amortization, you'd need to make around $120,000 of combined income with relatively no debt. So now if you triple that up or double that up, I mean, what type of income would you need to be supporting as a family? Are there going to be more co-signers on the deal, more parents? Is it going to be generational wealth or generational debt when it comes to these mortgages? And keeping in mind that as you increase the amortization on that mortgage, well, you're increasing the interest cost that could be coming with that mortgage. So another thing to really consider is ultimately, how is this going to affect clients that are renewing their mortgage, right? Let's see how the data rolls out. As we increase the insured thresholds, I'm sure there's going to be a lot of substantial changes that are going to be coming down the pipeline. And we'll be doing a little bit more of an in-depth talk on this as the data rolls out. So what are your thoughts on this? Is this actually going to help first-time homebuyers with mortgage affordability? Is it going to worsen it? Or is this just a ploy by the government right now to buy votes as we could head into an election a lot sooner than we thought? Let me know your thoughts in the comment section below.